Asian Paints, the top Nifty gainer today, up 4% as buying continues following a strong second quarter performance. Brokerages too issue a flurry of bullish calls following the strong numbers. Onasa Consumer gains almost 5% after a solid set of September quarter numbers. The revenue see a near 17% uptick. The company also posts a profit of 39 crores compared to a loss same time last year. Shares of Lemon Tree trade with cuts after margins contract over 300 basis points in a seasonally weak second quarter. Shares of Cohance Life Sciences trade under pressure as the company's profit takes a near 50% hit. Margins too contract. Shares of Pfizer rise as much as 2.5% after the company reported a healthy profit and revenue growth in the September quarter. Good morning, you're watching us here on Chartbusters. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu. Joining me shortly will be Nigel D'Souza. We keep an eye out on the way the markets are performing right now. The GIFT Nifty was indicating a softer start, but turns out that the market's holding fairly well in the green. And this morning, the Nifty Bank was very close to a fresh record high, holding around that 58,500 mark for that index, led higher by ICICI Bank and IndusInd Bank, which is doing extremely well as well. But apart from the banks, the stocks that are doing extremely well this morning include the likes of pharmaceutical stocks. So the Nifty Pharma Index comes up for you. That one too is at the high point. And your portfolios would feel a lot better today than they were over the last couple of weeks because the advance decline ratio as well tells you that nearly 70% stocks are more in the advancing side versus the declining side. So 1,700 stocks on the NSE in the green as against 1,000 in the red. Somil Mehta of Mirae Asset Share Khan joins in for a quick technical check on the market. Somil, how long before we cross past that 26,100 mark, which has been a bit of a resistance zone for the last month or so?
Good morning to everyone. I think it's not very far off now. I'm very positive on the markets, and I'll be expecting markets to keep going from here. We can see a small pause or a small correction in the intraday charts, but overall the trend remains positive. Last Friday, a very sharp recovery above the 40 daily moving average was a great sign for the markets. We are trading above the 20 daily moving average. These are all very good signs, and high top, high bottom formation on the monthly charts, on the weekly charts. These are all good signs for the markets. And I think the next target would be, as you said, 26,100, 26,200. And all-time highs are very close, and that would be my target. 26,200, 300 would be the target in the very short term. But I'm targeting at least 26,800, 900 in the medium term outlook. Overall, the trend remains positive, and buy on decline should be the strategy for Nifty. Bank Nifty is already outperforming. We saw very sharp recovery since last week, closing about 20 daily moving average, high top, high bottom formation. Bank Nifty has been trading in a channel pattern on the upside. Overall, a flag pattern has broken on the upside as well on the daily charts. So looks good. Targets would be 59,000.
A couple of stocks that you have today?
Stocks would be, the first one would be ICICI Bank. Just had a very sharp recovery from very crucial levels and now making high tops, high bottom. Stop loss would be around 1355 and the target would be 1450. The second would be Geo Finance. Geo Finance has been consolidating around 200 daily moving average, started making high tops, high bottom, and closing about 20-40 daily moving average, has broken a downward sloping trend line. So the stop loss would be 305 and target would be 340.
All right, take that point. And just as we move forward, delivery is moved higher, as has Glenmark Pharma as well. So keep an eye out on that. And Adani Group stocks, they've suddenly got a fresh wind as well. Adani Energy Solutions, Adani Total Gas, Adani Green, all of them, the Adani Group comes up for you and you'd see a big up move from the lows. And that's the kind of move that we've seen. In fact, a spike in Adani Green too. What we'll do is actually take a short break, and on the other side is a very special conversation that's lined up for you. It's the management of Force Motors, a rare voice, and then we have Crisil Intelligence joining in to talk about the premiumization trends in the sector as well. All right, you're watching us here on Chartbusters, and we are here back in full steam. As you saw, just as we were taking that break, Nigel walked onto the set, and now we will obviously take the show forward. In fact, talking about the show forward, Mahindra, remember, will enter a joint venture, Mahindra Manulife, to set up a life insurance company. And there you have it, Anish Shah speaking about this business commitment that they have and the plans going ahead. As you can see, there is a deck. It's a near 18,000 to 30,000 crore valuation over the next 10 years. The Mahindra commitment is rupee 250 crores for the first 5 years, total 3,600 crore rupees over the next 10 years. We will keep getting more details as and when. Yash is listening into that. That's M&M and Manulife, the JV that was announced. But let's get in some ideas for profit as well. This one comes in from our colleagues at Money Control Pro. Bharat Jinani joins in.
Today's ideas will be Titan Company Limited. The company posted healthy quarter 2 FY26 results with revenues growing 29% YOY. The growth was led by the key jewelry business, which grew 19% YOY. Growth was primarily driven by increased ticket sizes owing to higher gold prices, whereas the buyer growth dipped marginally on a YOY basis. The watches and the eyewear business posted double-digit growth but lacked the overall growth momentum. Titan's margins improved on a YOY basis. This is mainly driven by low base of the corresponding quarter last year. Titan indicated that the key jewelry business continues to witness strong demand traction. With the moderation in the gold prices post-Diwali, the consumer footfalls have increased. Also, the festive and the wedding season is expected to maintain the strong demand momentum. Titan indicated that the jewelry business growth in 9-month FY26 period would be higher than the growth seen in H1 FY26, indicating a very strong quarter 3. Titan continues to ramp up the non-jewelry business, which is also the key growth driver. In the jewelry business, the company continues to gain market share driven by enhanced network as well as localization. Titan has indicated that it would maintain the margins in the jewelry business despite the scenario of rising gold prices, which is positive. At the current market price, the stock is trading at a PE of 62 times FY27 earnings projections. Investors can add the stock number.
Well, thanks a lot for that, Bharat. For the time being, we'll slip into a short break. Come back, we'll continue to focus on markets and stock-specific action. Welcome back. Well, let's cut back to the Mahindra Group and Manulife conference, that's currently underway. The joint venture is being announced with regard to a life insurance, setting up a life insurance company. So let's hear out.
Insurance. Is the JV trying to capitalize on that?
So the JV will benefit from that clearly, and we are building this for the long term. In that sense, the momentum that we have today is a very good place to start with.
All right. Some questions from Outlook Business. How do you plan to tackle competition in the sector, which is dominated by one state-owned insurer?
We believe that this is a huge space, and there is room for many to play, as we've seen in the banking sector as well, and as we've seen with NBFCs. And the customer base we have, the connects we have, the understanding we have of markets is something that's going to help us play in a very meaningful way here.
Okay, moving to business Financial Express. Narayanan has asked, what is the distribution synergy that you see for the life insurance JV with other businesses like Mahindra Finance and Mahindra Insurance Brokers?
So Mahindra Finance has 1,345 branches. Mahindra Finance also has a corporate agency license. And with some of the work that's been done there, Mahindra Finance today is very well positioned to now pivot to growth and have some of these businesses contribute meaningfully to its bottom line and to its ROA. And therefore, that's going to be a key factor. But in addition to the Mahindra Finance distribution as well, this venture will look at banca. There are a couple of potential opportunities we feel good about, which we will disclose as time goes on. We will look at agency because it's one area where Manulife is very strong at. Manulife is also very strong in affluent customers and products for affluent customers. So serving urban customers with agency networks and Manulife's expertise is going to be a key area. And the digital channel. This is one where we bring a lot of strengths in, both from Mahindra's standpoint and from Manulife's global experience. And we aim to build a very strong digital channel, which will only grow with time to come. And therefore, it's a combination of Mahindra Finance, digital, banker, and agency.
Subrata Panda from Business Standard and Laltendu Mishra, who have questions around whether general insurance will be the natural extension, and do you plan to get into it at what point?
Yes, general insurance is a natural extension. We will look at this when the insurance regulator allows composite, and we feel that that will be an upside that we have to the numbers we've outlined here.
All right, let's turn our attention to the auto space then and understand the demand on ground, how this premiumization trend's going out, and what's the benefit of GST 2.0 as well. And we have a very special guest who's joining us today, Mr. Prasanna Firodia, the Managing Director of Force Motors. Good to see you in, Mr. Firodia. It's been a while since we chatted. And we also have Hemal Thakkar, the Senior Practice Leader and Director at CRISIL Intelligence. Thanks a lot for joining in as well. Well, Mr. Firodia, coming to you first. You know, your numbers that you delivered in October month were very, very strong. Could you tell us as an industry what's driving this growth? And could we help this sort of a momentum to continue as well? How much of it do you attribute to GST 2.0, the pent-up demand?
So, good morning, Nigel. First of all, I would like to say that, for us as a company, the H1 has been phenomenal. It's been our best H1 so far historically. And, GST kicked in only about recently, let's say about 2 odd months ago. But even before that, we've been managing to, increase our numbers across our core segments. And, our core segments are predominantly shared mobility solutions. And within that, segments such as tourism, staff transportation, education, health, all these segments have been growing. With the GST, we always had a big anomaly in in few of our product segments, between the 10 and the 13-seater vehicle category. Unfortunately, our vehicles were clubbed at almost 43% GST. That was a big impetus to growth, and because we had 28% GST and cess, and it just didn't make sense to have shared mobility solutions being pegged at that high level of a GST. Having rationalized that by the government, that's been a 25% reduction in some of our vehicle platforms, and that of course has helped us in growing numbers even further. So overall, definitely in certain segments for us, GST has been a huge benefit in terms of getting traction back on certain product platforms. And the numbers for the H1, have in totality grown as well.
Mr. Firodia, let's not just talk about H1 and the GST itself. It's a lot more recent phenomenon. But the underlying trend, and that's something that we're likely to discuss with Hemal as well, is the SUVization of the nation and the premiumization in mobility, personal mobility and shared mobility. I mean, the numbers that we have right now, SUVs, which accounted for what, about 28% of the overall vehicle market, are now 52% as of FY25. So just wanted to understand, how has your journey benefited the most from this, and what is it likely to be from here on as well? If you could give us some numbers, some market share, some more data.
So we are not a significant player when it comes to SUVs. Let me first clarify that. On the SUV segment, we have one product, which is the Gurkha, which is a hardcore off-roader vehicle. It has multiple variants. It has a civilian application. And now we have multiple variants on the Gurkha platform, which predominantly go to the defense services. So that's a growing segment. As a company, we are very focused on growing into the defense market. We just got an award from the Defense Forces for supply of about 3,000 odd vehicles as well. We are also continuing to supply to the armed forces our light strike vehicles as well. Now, in terms of premiumization, I think for us, the focus has been with our new grounds up complete new platform, which is the Urbania. This is a 9 to 17-seater grounds up complete new platform, which is significantly more premium. And the opportunity we have here as a company is to create this segment. And that for us is a very exciting and a very satisfying opportunity as well. On this segment, this is now, taken into premium tourism. This is taken into premium staff transportation. And as India grows as an economy, as people's expectations, aspirations are growing,
Okay.
premiumization of transportation solutions is something which is becoming a necessary factor. And this, our Urbania has been doing extremely well.
Okay, all right. Just a quick word with regard to this Urbania itself. It's clearly captured the market, and you see a lot more. Whether you look at UP or you look at even in Bombay, and I think GCC demand has been quite strong out there. If you could put a number to it, Urbania as a percentage of your mix, what is it at? Because earlier we were used to seeing from Force Motors mostly the Traveller, which was ballpark 10 to 15 lakhs, and now you have the Urbania, which is 35 to 40 lakhs in that vicinity. So how much is it as a contribution of your sales mix as of now? And are you seeing incremental demand?
Correct. So we are basically now at a steady state production of about 600 odd vehicles. But the key element here is that we are creating this segment. And, this segment is growing in India. We are creating this segment. We are evolving this segment. So I see this as a great opportunity, and I see this space growing as well. So there's definitely a lot of scope for improvement in the numbers within the domestic market, but also what is very satisfying for us on the Urbania platform is that we are able to now export this vehicle into multiple, international countries. For example, we are now selling the Urbania in all of GCC. We have started selling this vehicle in Latin America. So we see a lot of traction on this platform in the international markets, and the opportunity in terms of the total industry volume where we can play on the international market is substantial. So on the domestic side, clearly, this is a premium shared mobility solution, which is doing extremely well. It's a good product for us from a top line perspective, from a bottom line perspective. We are able to grow and create this segment for the domestic market and penetrate significantly into international markets as well.
We missed that number, sir. What is the run rate currently of the Urbania?
So we are at about 600 vehicles a month.
Okay.
This was just launched about 2 years ago. But I think the key factor here is to understand that this is a new segment being created.
Yeah.
There is no set PIV per se. So, we're just building onto this segment, and it's growing in a very satisfactory manner, both from a consumer point of view, from a fleet operator point of view, from a taxi operator point of view, and there's a lot of pull that's coming into this premium mobility solution.
Take that point. We'll get back to you. We also have Hemal Thakkar, who's a senior practice leader and director at CRISIL Intelligence, joining in. Hemal, there are these underlying trends that we're talking about, and as Mr. Firodia has been talking about as well, while these trends continue, there are newer offshoots which are finding some traction as well. Case in point, premium shared mobility, the likes of Urbania, etc. How big do you think the total addressable market for something like this could be? And are there any other players here too?
So if you ask me, we've seen premium cab services also, kind of play some role, likes of chauffeur, etc., which have kind of cropped up in the last couple of years, which are offering premium cab aggregation services. Urbania is more focused on, tourism per se, if I have to say so. And something like chauffeur is more, within the city or intracity, if I have to say so. So that is something which is shaping up, but this is a very, very niche portion of the overall market at this point of time. But I would completely agree to what Mr. Firodia also mentioned that, this is a new segment which is getting created. So, over a period of time, we will see this, kind of picking up, because this is more of a lifestyle oriented service that, you are offering over the current mass market service that you have in the market today.
Okay, all right. Hi, Hemal. Good to see you in. What about demand trends? What is your observation? Was it a flash in the pan with regard to October? The kind of demand that you're seeing, or do you expect things to continue from here on? And also, if you could give us your sense with regard to this entire premiumization push that we have been seeing. How do you see the trends shape up from here on?
Sure. So, you are absolutely right in saying that if I look at the numbers, say 5-6 years ago in fiscal 19, the sub 4 meter category was almost 60% of overall sales, which today is at about 28%. And if you look at SUVs, including vans, was about 35%, which has doubled to 70%. So there is a clear trend that, kind of premiumization is happening at an overall passenger vehicle category level. Now, within this also, if you see, there are certain other trends on the powertrain side, where EVs are almost about 4.5% of overall sales. The average realizations are quite better than a normal ICE vehicle. And similarly, strong hybrids are about 2.5%, wherein again, the average realizations are better. So the premiumization story is definitely playing out. Now,
Right.
your next question with respect to, how the overall scenario is shaping up, and, we've seen, a reasonable growth in October, which was to the extent of about 17%, in terms of offtake. And even in retails, we've seen a growth of about 11.5%. Now, if you look at the overall picture from April to October, we know that after the announcement by our Honorable Prime Minister on 15th August that GST is going to be cut, we had seen a sudden dip, in the overall sales. So if you look at the total picture till date, offtake has grown by about 3%, and, retails have grown by about 5%. Our expectation is that, in the second half, we may see a growth of about 6 to 7% in the overall offtake, thereby bringing the overall number for the industry
Yes.
to about 3 to 4% for the overall year.
All right. All right. Hemal, thank you so much for joining in. Running out of time, but not out of questions. So perhaps we'll take this forward once again and, talk a little more about what the future looks like for both Force Motors as well as the industry on the whole. Yeah. Thanks a lot, Mr. Firodia, for joining in.
Well, and thanks a lot, Mr. Firodia, as well, for joining in. A rare voice that we're hearing after a while. We'll talk and catch up soon, and hopefully we get an understanding with regard to the ambulance segment as well as defense that you briefly spoke about. Thanks, Hemal, for joining in as well. Well, before we wrap up, Manoj Gaur, the MD of JP Infratech, has been arrested by the ED in a case of cheating home buyers. We'll get you an update on the other side. For the time being, we'll wrap up in Chartbusters. Don't go anywhere. Trading Hour comes up next.